30% moves on earnings, but a lot of them, what do you make of it?
It's not normal, quite frankly, right? I mean, it's either there's high short interest or they're kind of the meme names. Thankfully, to be honest with you, they're not in the S&P 500 benchmark. Otherwise, I would have to pay attention to them. They're a small piece of the market overall. If you want to play in those names, go for it. But those are not trading on real fundamentals. I mean, I know if you disappoint on earnings, I get that. Or if you beat on earnings, I also get that. But to move in these kinds of ways is really, it's a little disturbing. But I'm not I'm paying attention to it, Brian, but it's not something that I would invest in because it's not really investing.
No, it's gambling. I mean, it's guessing, even worse, right? I mean, at least gambling, you might be able to put the odds. I mean, when you buy a stock and it falls 30% after hours, that's something else. But there is something else to be said about this. And somebody asked me, like, what's the bull case for stocks long term? And it's my friend. That's kind of actually how he sounds. And I said the fact that the number of stocks in the market has been cut down by half, even more so with buybacks, but the amount of money is going up. I mean, it doesn't take a market genius to realize fewer assets, much more money, the path of likely resistance is up.
Right. It's supply and demand. But look, overall, right. But step back for half a second. I mean, overall for the market, earnings have been very good, up 37.1% year over year. And you mentioned it, buybacks, dividends, the free cash flow has been enormous. And so you're not only seeing buybacks and dividends, but you're also seeing M&A. You're at $3.7 trillion year to date on M&A. That's versus 3.5 all of last year. So we've already surpassed it. And so I like that they're doing good things with their cash flow. And now all of a sudden you're starting to see spins as well, which is sort of kind of interesting. So let's focus on the fundamentals and pick some good quality companies. There's plenty to be had. If it's a little bumpy here in the short term because of inflation fears, I think you want to pick some names, quality names, and think about between now and the end of the year, it's seasonally the strong period to own equities. And so that's why you want to do it.
Okay, let's find some of those on Opportunity Fridays. I'm literally branding the show as we go along here, Stephanie. I am in London. I flew United. I booked my ticket a month ago when COVID was popping here. I paid next to nothing. I looked for the same flight. This is true. 3 weeks from now, it was 4 times the price. Literally 4x from Newark to Heathrow. That's got to be good for United. It's got to be good for Expedia. It's got to be good for travel in general.
In general, and Reopen is alive and well. The pent-up demand is enormous. And to your point on UAL, the CEO was on CNBC earlier this week and said that international travel is actually off the charts. There's a 100% load factor last weekend alone from international travel. So demand is absolutely on fire. Wynn Resorts talked about how in October their EBITDA was at record levels. We've heard from a number of companies in Las Vegas. That's booming. And Expedia, the CEO said that their bookings in the summer of 22 are higher than 21. So Reopen is alive and well.
Wow.
Consumer has $2 trillion in excess savings. So there's pent-up demand. That's definitely a theme that I want to be playing at this point.